Hello investors, welcome to Business Learnings. Uh, in this video, I'll tell you exactly when the markets are expected to crash. I'm talking about the Indian stock market, Nifty Sensex, whatever we call it. Uh, I'll also give you a detailed explanation, at least my analysis, so that you can get started on your own if you doubt it. Uh, Now, before I start giving the details, please subscribe to the channel so that you do not miss on my future videos where I'll tell you how to make smart money. So let's get started. Make sure that you watch the video throughout the end so that you get complete understanding and you do not miss a point. Let's start. Uh, Before you understand when will the markets crash, you'll first have to understand why are the markets rising. The markets are rising because of quantitative easing, which simply means all of the governments across the world, led by the United States, printed a lot of money. A lot of money was printed, and that's why that some part of that money is coming into the emerging markets like India, and they are then pushing up the stock prices. That's what has been happening so far. Uh, if you look at the FIIs and DIIs data, FIIs foreign institutional investors, DII domestic institutional investors. These are two primary investors, prime investors who actually drive the market. They control the entire market. They decide whether the market will go up or go down based on how much money they they they, they pour in, or how much stocks they sell. For the past couple of months, FIIs have been investing a lot of money, and they got so much money because their governments printed that much money. DIIs know, domestic institutional investors know that the markets are overvalued, and that's why they have been selling for the past couple of months. When the FIIs also start selling, the markets will crash. Now, the million dollar question is, when will the FIIs start selling? When exactly will they start selling? They'll start selling when they'll have cheaper options, other options which are better than the Indian stock market and which are cheaper as well. What are the other options? Uh, we'll first have to understand this is a lot of money. We are talking about billions and probably trillions. This much money can only be parked at two places. First, the stock market, and second, the bond market. United States bond market is bigger than the United States stock market. Uh, I'll show you this chart, not this one. Yes, United States equity market is currently about 50 trillion US dollars. The bond market was about 45 in 2019. Currently, it's comfortably above 50 trillion. So all of this money, the extra money you know, uh, that was poured in by various governments, mainly the US government, they will be taken out from the emerging markets, stock markets, only when they'll find a better option. The better option is the bond market, and the question now remains is, when will they invest in the bond markets? They'll take out their money from India. India markets will crash when US bond markets will become cheaper. Currently, the US bond markets are expensive. How do I know the US bond market is expensive? I have opened this chart, US government bonds 10-year yield. I have taken out the chart for 10-year because it has the most liquidity, it's the most popular one, and it has the biggest market capitalization. That's why I have taken 10-year bonds. If you look closely at this chart, currently the yield is about 1.12%. So if you buy $100 worth of 10-year bonds, you'll get about 1.12%. That's it. The PE will be your earnings will be $1.12 if you invest $100. Therefore, your PE will be about 88. 88 is quite an expensive PE, even for US government bonds. Historically, US government bonds, the 10-year bonds, they have been averaging at about 2%. If you see, for the past few years, they have been averaging about 2%. There was a high of about 3.2%, but 2% is a safe number. Just before the crash happened in March, and just before the crash, if you see, it was somewhat around 1.5%. So we can safely say that as soon as these rates go up to 1.5%, we'll start seeing some some pullbacks. FIIs, foreign institutional investors, they'll start selling and taking out their money from emerging markets, including India, and they'll start putting this money into the US bond market. As soon as this level, the interest rates, the yields, they reach 1.5%. Now, the question remains, when will these rates become 1.5%? If you look closely at the chart, you'll see that there was some consolidation happening from the past 2 months, and then there is a breakout. It was hovering at around 0.9, and now after the breakout, it has reached to the levels of 1.12%. And overall, the direction of trend also for the past 4 or 5 months is, from 0.5%, it has gone up to 1.12%. If I simply try to extrapolate this, I can simply project that uh, towards in September or October, it will cross the crucial level of 1.5%. As soon as that happens, FIIs will realize that, hey, India is very risky. If we are getting 1.5% in our home, why should we remain invested in riskier countries like India or probably some other countries? They'll start pulling out their money. When will this happen? Based on my understanding, about September or October. You can do your own analysis. There are a lot of other factors also, but this is as simplified as I can make it, and that's what my understanding has been. If it will, and the understanding is that the yield will keep on rising. It will mean revert. The yields will keep on rising. It will approximately reach the levels of 2% in about 1 or 2 years, and when that happens, more money will be pulled out of India. And with DIIs being the net sellers, FIIs also being the net sellers, retail investors won't be able to support because they are, they cannot support. They just follow the herd, and we'll see a decent amount of correction. So expect a good correction this year, probably towards the last quarter of this year, this calendar year. At the beginning of the last quarter of this calendar year, we might see some correction, probably some good correction, and in a year or so we would have seen a decent correction. So thanks a lot for watching this far. If you like the video, please press the thumbs up so that it's really helpful for know what kind of content should I be creating. Thanks a lot for watching. See you in the next video.